Hello and welcome back. It's Matt here, and of course, I am sat with James Tiller. Now, you'll notice a new logo on our shirts today. This is the first video under the new brand, Market Property Expert. So, just in case you're confused, Christopher Shaw has changed, and we are welcoming a new guest for our first show under the new brand. And today's topic is going to be stamp duty land tax. And if you've ever purchased a property, then the likelihood is you will have paid stamp duty land tax, and it can often be a considerable sum, handled by solicitors at the end of a transaction to break down some of the myths and perhaps offer a few surprises, whether they're good or bad. On the subject, we are delighted to welcome stamp duty expert Ben Gatford on the channel today. Welcome, Ben, to the channel.
Thank you very much for having me. You
Good,
guys all right?
reaction to a bit of a drama there, losing all your lights, but actually, in fairness, you actually look much better now and a lot more natural. So, Ben, thank you for jumping on with us. To start us off, why don't you tell us a bit about yourself and your company and what you guys do?
Yeah, sure. So, my name is Ben Gatford. I'm one of the senior stamp duty consultants at Capex Associates. Capex Associates is a property tax consultancy. So our job is to mainly support the professional services within the transaction. So solicitors, accountants, estate agents, that kind of thing. But also help clients ensure their clients pay the correct amount of stamp duty. So that's what I do.
The fun stuff, paying tax.
Yes.
And where are you based? Are you local to us?
So we're based in a place called Barston, which is West Midlands, so outside of Birmingham.
Yeah.
But close to Henley and Arden, nice leafy area. So,
very nice.
It's all right. Yeah, right in the middle.
Amazing, amazing. Well, look, let's kick it off with the first topic then, which is just to summarize: what is stamp duty land tax? How is it calculated, and kind of what is its purpose?
Yeah, sure. So stamp duty land tax was introduced in 2003 to replace stamp duty. It is a tax on all properties and land within the UK. So as a buyer, if you ever bought a property, you will know you will be faced with a tax. That tax increases as you acquire more property. So on your main residence, you will pay a lesser amount of stamp duty. If you're acquiring lots of different property, then in 2016, as a lot of people will be aware, there was the 3% surcharge introduced. So that purpose was to curb the enthusiasm of property developers and allow more first-time buyers to get into the market. And at the same time, there were lots of stamp duty reliefs made available. So about 49 of them. So yeah, it's a tax. Unfortunately, we've all got to pay it. But depending on the situation you're in, you might pay more, you might pay less.
So Ben, just to sort of go over one of the main reasons for getting you on today is that we've seen that people have been able to claim back certain stamp duty reliefs or claim back money that they paid out. How long has that been a thing, and how has it come about that people are now able to make these claims?
Yeah, this isn't actually a new thing. I think this is more about awareness and education. It's a pretty strange situation in the UK because when you buy property, you go to your solicitor and they will typically be the one that will advise you of the amount of stamp duty that they think that you have to pay. And that's based on the government calculator that they use. But they'll be the first to admit then they're not a tax advisor. And so a stamp duty is a self-assessed tax, right? So as the buyer, it's your responsibility to make sure that you are paying the correct amount of stamp duty. And your solicitor is not going to be the one to advise on that. They may direct you, most of the time that's going to be to your accountant, let's say. Therein lies the difficulty because most accountants don't do property tax either. And so with stamp duty, there is a bit of a hole when it comes to advice. So these reliefs have been around for a very long time. However, solicitors typically aren't going to advise on them because if they get it wrong, they can be fined. And a lot of people don't seek that advice, and they just think, well, I'll pay whatever it is that you think I've got to pay.
Yeah.
And so these reliefs as I say, have been around since 2003, but moreover 2016 onwards for some of the most recent ones. But they can cover things like multiple dwellings. If your property is in or the one that you're buying is in a dilapidated state, it could be, depending on the use of the property, if it's going to be a care home, for instance, or it's going to be a holiday let, or depending on the use case for that property, the stamp duty will change. And so these reliefs, they've been introduced intermittently, and they all depend on previous case law. So, for instance, just picking up one example maybe relevant to your audience would be uninhabitable relief, which you guys may have come across, and some of your audience may have come across as well. A lot of landlords are seeking to buy a property where they might be able to do it up and make a margin on the acquisition, not just on the rental. And so, since 2019. There was the P.M. Bewley case, which had come into effect, and that set the case precedents for certain types of property being able to receive reduced stamp duty. In recent weeks, that has changed. There has been other cases as well, but I'd say that that's a key one. So these reliefs have been available for a long period of time. I think it's mainly about education and receiving the correct advice. Obviously that's my role, to try and help people navigate that and understand it. And as I say, we support the solicitors who really are in a tricky spot because they have to collect the money, but they don't necessarily know how to calculate it effectively.
Yeah. So Ben, at which point would you kind of say to a landlord who's looking to purchase something, at which point do they need to kind of engage the process, and if they weren't aware of it and have recently bought something, what's kind of the backstop for, claiming this relief?
Yeah, that's a great question. I would say there's a couple of times where you can pick this up, right? So if you're an existing landlord and you purchase property, anything within the last 4-year window can be re-examined.
It's a lot longer than I thought then.
So that's the first one, right? But if you are looking at buying future property, there is nothing stopping you seeking advice and being able to benefit from that advice at the point of completion. And to be honest, that just makes sense, because why would you choose to send money off that you shouldn't have to in tax if you can ensure that you pay the correct amount on the point of completion? So there's two things there. We're going to do it now on future acquisitions, or it would be on anything in the last 4 years that you bought.
That's a good amount of time. Now, you mentioned off camera that they regrettably are tightening up on some of these kind of rebates, for want of a better word, and they are gearing more towards structural as opposed to the traditional. It doesn't have a kitchen, or it doesn't have running services and things. So maybe could you tell us a bit more about that and how you found they've tightened these things up?
Yeah, I mean, the developments are very, very recent. So we are still getting to grips with the case that has just gone through at the moment, the impact that that's going to have. Obviously, our job is to navigate what effectively is a number of grey areas, right? But we want to be in line with HMRC guidance, in line with legislation when we're looking at adjusting these things. And the impact of that case is yet to be fully known. However, what we can say at this point in time is that the availability of this relief is going to be significantly lessened. Where previously the predominant case was the P.M. Bewley case of 2019, which really reflected on the property being fit for habitation at the point of completion, and if anything impacted on the property's use as a dwelling, then there is reasonable argument and reasonable case to reduce the stamp duty based on that. But whereas that would have previously looked like the kitchen not being fit for use, the bathroom not being fit for use, some issues with the plumbing and the electrics, and maybe some damp and mold or something, that really isn't going to cut it anymore. I mean, that is more going to be centered around significant structural issues that are going to be quite costly. So I think whereas a lot of Potential buyers may have seen the availability of uninhabitability relief being more attainable. It isn't going to be the case anymore, based on this new case that's gone through the courts, gone through tribunal. We do think that this is going to be mainly centered around structural issues. You're talking more subsidence. You're talking about the supporting walls being damaged. That if you're able to move into that property and sort out the issues at the point of completion, that probably isn't going to be good enough. You know, it would have to be fire damaged. It would have to be vacant for a number of months. You know?
Yeah. And is it who works out the amounts? Is it a kind of a sliding scale depending on the work, or do you find that it follows a formula of how much people can claim?
So in terms of the calculating of stamp duty, okay. So when you buy a residential property, there are residential rates, and everything else that isn't residential is commercial rates. Or you'll hear the words commercial and mixed use. They mean the same thing, right? So there's two different calculations. There's residential and there's commercial. So for uninhabitable properties, a residential property has to meet the description of a dwelling within legislation. If it doesn't, then there is a case to say, well, if it is not suitable for use as a dwelling, it shouldn't be classified as residential. So automatically then it falls onto the mixed use calculation. And the mixed use calculation is significantly less. And where we see people saving the most money is where they are buying investment properties, where the 3% surcharge applies. For a mixed use property, the 3% does not apply. You avoid, or you save that 3%. So without getting the calculator, I can't really say, but typically, you're looking at about a sort of 50% saving on stamp duty if the property that you're purchasing cannot be fit for use as a dwelling. It's not a sliding scale. It is those two calculations, but depending on, if you've been in the UK for out of the UK for 6 months, there's another surcharge. If you're buying a second property, there's a surcharge. There are surcharges, but there are two calculators that are used, essentially.
Exactly why you get an expert involved like yourself.
So what's the procedure, Ben? How long does it take to make the claim if you're doing it after the event, so to speak? So it's a retrospective claim.
Yeah. Realistically, I would say a couple of months. It's not an immediate thing, but also just take that with a pinch of salt. When dealing with HMRC, as anybody who's dealt with HMRC know, it can be fairly tricky. We move on their timescales. So if the property, if it's a historical case where we're looking at a property that's been purchased within the last 4 years, but it was over 12 months ago, then that can be a slower process. I don't want to sugarcoat anything. So that could be, theoretically, it could be up to 18 months, which has been probably our longest case. But most cases, especially properties that have been bought within the last 12 months, can be resolved within a couple of months.
That's a good time frame. So I guess this will be going out to a lot of our existing clients who are lounge, who may have purchased stuff in the last 4 years. Certainly worth, if they've got any memories of having any of the examples that you've mentioned, or they were thinking of a quick flip and get a tenant in, it turned out to be a lot more work required or structural work required, then it's probably worth getting in touch with you.
Yeah, I would say so, definitely. I mean, it may well be that we can't do a lot, in which case we'll just be completely straight with you. But I'm open to having a conversation with anybody. Again, I think a lot of it is just about awareness and education. So if the most somebody gets out of speaking to me is a little bit more awareness of things to look out for in the future and things to be aware of, then
that's great. I mean, that ultimately is exactly why we do these videos, because we're not asking for anything in return for it, but we like to bring a bit of information and kind of spread the knowledge, and we all get better at what we do by sharing knowledge, really. So I really appreciate you jumping on. Obviously, I know you're really, really busy, and your office is everyone's go today. But yeah, thank you for being our first guest under the new brand. We will.
Well, thanks for having me.
You're very welcome, and we'll obviously put this out in all the usual channels, and we will link to your company and your contact details wherever people may see this, whether it's Facebook, YouTube, or in our newsletter. So hopefully you'll get some calls.
Super. Appreciate that.
Thanks a lot, Ben.
Thanks a lot, Ben.
Cheers. Take care. Bye bye.
Cheers.
And don't end the end of recording.
Record.